The month of March, we only had one tradable opportunity, unless we get a tradable opportunity with the PCE print. This is made before the Friday release. So it's just a reminder that when we're trading these calendar risk events, they don't happen all the time, and you can go through spells without anything clearly tradable. The only tradable event at the time of making this video, just as we head into the end of March, was the NFP that we got on the first Friday on the 7th of March. And you can see that even that was trickier because, yes, it wasn't below minimum expectations, but we were able to analyze the data based on the forecast distributions that we had at the time. That did give us a tradable opportunity. And so we took that euro dollar upside into the pivot point. And for those of you who were in it will remember that trade. But it's just a reminder that these tradable risk events don't happen every day. But when they do happen, they tend to be unidirectional, and they tend to give us a strong bias in one direction. So they are worth waiting for, even if we have to be patient. So without further ado, let's look what we've got coming up for the following week. So as we approach the coming week, what should we focus on? Well, the first thing to look at is the ADP jobs report, which we've got coming on April the 2nd. Now, this is not, necessarily going to be a big market mover, and it won't be a live risk event, but it's important because it sets the tone for the non-farm payroll print on Friday. It's not very good at projecting what the non-farm payroll is going to be, but it is very good in setting the mood. So we will look at this. The last jobs report for the ADP numbers in February saw an increase of 77,000 jobs. Now that was the smallest gain in 7 months since July 2024, and it was well below the expectations of 140,000. So it was a big, sharp slowdown. And what we'll be looking for here, is there any further slowdown in private hiring? Reasons cited for this slowdown was policy uncertainty, consumer spending slowdown. Obviously, tariff concerns has been weighing on US sentiment and a number of soft data points. But is this more? Is there more to this? If there's a sharp slowdown here, then that could really send the dollar lower. So definitely worth looking at on the April the 2nd print. But we're not covering it. But if there's a big miss outside market expectations, then do look out for reaction. So it gets an honourable mention. The first risk event we're looking at will be the Swiss CPI data on April the 3rd. This is worth looking at. Inflation in Switzerland is unlike the rest of the world in that it's well within the SNB's target. In fact, it's so much within their target, there is speculation that the SNB is going to have to start moving towards negative interest rates. So February's print, 0.3%. It's showing a marked move lower. The SNB don't need to worry about inflation surging higher. So what we're looking for here is a surprise print below market's minimum expectations that brings forward and brings back talk for negative interest rates. And remember, Swiss is an export economy. They don't want to see a really strong Swiss franc. Now that euro strength is helping them at the moment, but if we start getting tariff concerns, coming in next week, and you suddenly see the Swiss franc strengthening again, and then inflation surprises the downside, talk of negative interest rates will quickly return. So it's worth us covering. The bell of the ball next week is obviously the non-farm payroll. It's the earliest report in terms of how the US economy is doing in March, and it will be closely viewed to see, how many federal jobs are being impacted by Doge and that drive for efficiency. Last month, February, US economy added 151,000 jobs, up from the 125,000 in January, but it was still below the 160,000 forecast. If you remember, on net, it was a bit of a weaker print. It was a tradable opportunity from last month. At the time of making this video, the only tradable opportunity. Federal government jobs, interestingly, did fall by 10,000. That was cited due to early Doge layoffs. So we'll be keeping an eye on that. And bigger drop than markets are expecting will impact markets. We'll obviously be looking at the other metrics as well. And of course, the unemployment rate, which the Fed projected to tick up to 4.4% in their March meeting. You can see that the Fed essentially revised growth lower, unemployment higher, inflation higher, and they're keeping interest rates the same, citing uncertainty. So there's a lot of potential movement that we could get from this print. If you start to see unemployment rate, putting up to 4.5% would be really interesting. Then we could see some dollar weakness. We'll be covering all the details in more depth as we get nearer to the time and we get the broad range of distribution and find a more finessed outlook that really digs into the detail, but that will be done live near the time. Okay, folks, that's what really matters on the calendar. Top 3 events for next week. Take care, and I look forward to seeing you in the live risk events.